Welcome to Factful Finance. Let me ask you something. Have you ever found yourself wondering what exactly qualifies someone for unemployment benefits? You're not alone. Many people think they're eligible, but the rules can be tricky. Understanding the ins and outs of unemployment insurance, UI eligibility, is crucial, whether you're facing a job loss or helping someone else navigate this process. Let's break it down in today's deep dive into part 2 of our unemployment series. First, a quick reminder. This content is for educational purposes only. While we offer insights, it's important to consult a professional for personalized advice on your specific situation. Now let's jump right in. To qualify for UI benefits, the basic eligibility requirements hinge on a few critical factors that vary slightly from state to state. However, most states follow a similar set of guidelines. The first requirement is work history. To be eligible, you typically need to have worked a certain amount of time or earned a minimum amount during a specific period, often referred to as your base period. This is usually the first 4 of the last 5 completed calendar quarters before you file your claim. For example, if you lost your job in June, your base period would likely span from January to December of the previous year. This work history ensures that you've contributed to the unemployment insurance fund through taxes during your employment. Next up, wages. Most states require you to have earned a minimum amount of money during your base period. This amount varies, but the principle is the same. States want to confirm that you've been working and contributing to the system. So let's take an example. Imagine Emma, who worked as a marketing coordinator at a tech company for the past 2 years. Emma was earning a decent salary, but when she was laid off, her previous earnings became the foundation of her UI eligibility. The third big requirement is being able and available for work. If you're not actively seeking employment or are unable to work due to illness, caregiving responsibilities, or other factors, you might not qualify. This is where things get tricky, especially in the context of part-time workers or gig economy workers. For instance, Liam, who worked part-time as a freelance graphic designer, was laid off and applied for UI. He had to prove that he was actively seeking full-time work and available for opportunities. Now let's talk about the crucial factor, the reason you lost your job. If you were fired for cause, meaning you were dismissed due to misconduct, you may not be eligible for unemployment benefits. On the other hand, if you were laid off due to no fault of your own, like budget cuts or downsizing, you're much more likely to qualify. For example, Noah worked as a cashier at a retail store that had to close during the pandemic. He was laid off due to no fault of his own, which made him eligible for UI benefits. Understanding these eligibility factors will help you determine whether you qualify for unemployment insurance. But it's not just about meeting the minimum requirements. Many states have additional rules or exceptions, so it's essential to check with your local unemployment office or use the online tools available. Let's wrap it up with a quick tip. If you're unsure whether you meet these requirements, it's always better to apply than to assume. States often have processes in place to review and determine eligibility, so there's no harm in submitting a claim to get the process started. So what's the first thing you'll do to figure out if you're eligible for UI benefits? Drop your thoughts in the comments below. We'd love to hear from you. Thanks so much for tuning in to Factful Finance today. If you found this video helpful, why not click the bell so you never miss an update? We think you'll find the video shown on screen next really valuable as you continue your financial journey. Keep up the great work, and we'll see you in the next one.